At you on a weekly basis. This is Mr. Market with Gurinder. I want to continue our topic from last week, which is definitely real estate, what we're seeing in the Canadian housing market, what are we seeing in particular in Ontario. And I'll definitely take you through some of the news that we've seen recently. I'll take you through an article here by Move Smartly. Obviously, you must have heard of the Fed raising, this is the U.S. Federal Reserve raising their rates for the first time in 2018. And obviously, this is going to affect the U.S. market, the housing market, the financial market. And lastly, I just want to show you some numbers of active listings because this definitely ties into our story in terms of where the market is headed in March moving forward and what we've been seeing in February. So once again, I am a wealth management advisor. This is a bit of data. I'm going to show you a bit of my perspective, my opinion. If you're definitely looking for some advice, I always suggest speak to a professional, get that information, consulting, or just another opinion that you're looking for, and obviously work with a professional that you trust. So why don't we kick it off here? The first article here is by Jesse Bains of Yahoo Finance. So Canadian real estate, buyers get more options while prices break more records. We know there's slowly but surely inventory is definitely, becoming more and more, but price records, we've reached those. And I don't know if they're going to continue to go higher or they may steadfast. But let's talk about that. And that's definitely going to be one of the topics of this video. So definitely stick around. So Canada's real estate market gave buyers more options in February, but demand quickly gobbled up supply, pushing prices to new highs. The Canadian Real Estate Association says home sales rose 4.6% in February compared to the month before, and they're chalking that up to rebound in new sales. So sales were 8.2% below February 2021. As I've shared with you before, I believe 2021 was definitely an outlier in terms of number of sales, number of mortgages taken over, and just activity in the market. But February 2022 was still the second busiest February on record, led by Calgary and Edmonton. New listings rebounded 23.7% month over month after falling 10.8% in January. So the Greater Toronto Area, Calgary, and Fraser Valley were key contributors. So you will see, new listings are definitely rebounding. So this article will definitely be in the link. This is a video with Jesse Bains, Steve Starsky, John Pallas, who we're going to review his article shortly as well. If you're interested in watching the video, just click on the link below. Real estate in the coming months. So the Canadian Real Estate Board says the February uptick in supply is similar to 2020 and 2021. In the short term, expect at least one more month of strong sales as the majority of those new listings came onto the market near the end of the month. So many of the associated sales won't likely happen until early March. This is Canadian Real Estate senior economist Sean Cathcart. Ideally, listings will continue to come out in big numbers in the months ahead. So what we're hearing in the market is after March break, we're expected to see more homes on the market for sale. And what's that going to do for pricing, consumer sentiment, etc. And I'd love to hear your thoughts. So put it into the comments and tell me what you think is going to happen after March break. Combined with higher interest rates and higher prices, we could be at a turning point where price growth begins to slow down and inventories finally begin to recover after 7 years of declines. We'll see what happens there. And obviously interest rates, the Bank of Canada has started raising interest rates and signal more are coming, which have historically put a damper on housing market enthusiasm. Ever since interest rates have been record low since the pandemic onset since March 2020. More credit, more liquidity, people utilize that. Financial asset prices have obviously gone up. You've seen home prices, you've seen the financial market stocks, and you obviously seen cryptocurrency. So, housing is no exception. The Canadian housing market is running headlong into higher interest rates, and the next few months could be telling, says BMO senior economist Robert Kavak. I'd love to hear your thoughts. What do you think about interest rates? What do you think about the real estate market? I'm sure some of you obviously are in the market. That's why you're watching this video in terms of buyer or seller. I'd love to hear your thoughts of what you think. Next, this is an article by Move Smartly. This is their March 2020 view, the top data trends and key stories. This article is, by John Pallas. He is the president of Real Sophisy. They're a real estate, brokerage in Toronto, and his information is fantastic. You can follow him on Twitter. I really respect his opinion, so I want to bring this data to you. I'm just going to go quickly of what the market was in February, and then I'm going to talk a little bit about what is the community, what is the real estate market seeing in Toronto, and particularly in the GTA. So the average price for February was 1.679 million. That's a 31% increase year over year. And the median house price in February was 1.485, so 32% increase. House sales are down 20% year over year. We've been talking about this. 2021 is an outlier. We're definitely not going to see the same number of sales in 2022 as we saw in 2021. And for new listings in February, they're down 12% year over year. They're about 2,400, so a 16% decline from last year. So less houses on the market, obviously price increases will go up because supply and demand, essentially. For condos, the average price for a condominium in February reached $836,000, so 26% increase from last year. The median price for a condo in February was $772,000, 26% increase as well from last year. And condo sales were 10%, down 10% in February compared to last year, but they're above the pre-COVID-19, levels from 2019 and 2020. New condo listings were down 9% in February over last year, but 46% higher than the new listing volume in 2020. The number of condos available for sale at the end of the month, or active listings, were down 22% over the last year. So again, what's the trend? We're seeing new record in terms of sale prices, but we're seeing sale volume down, and obviously the activity, has taken effect from there. And now this is what I want to share with you, which is Toronto's real estate market slowing down? The incredible demand that has pushed Toronto home prices up more than 30% last year seems unstoppable on paper, but on the ground is showing some early signs of easing up. On Twitter, fellow industry watchers and I have been discussing some of these early signs of a slowdown over the past few weeks. Notably, Twitter has become the source of real-time on-ground insights and about the housing market months before these trends show up in aggregate demand or aggregate data. I've been talking about with you guys for some period. I show you threads on Twitter. Get onto Twitter, follow these individuals, follow myself. I have my link in the description as well, where you'll see this data. You'll see it before the data. You'll see it in the data in terms of the numbers. You'll get a bit of early indication. Continuing on, I'll start by saying that one of the challenges of discussing early signs of a slowdown is that home buyers and housing analysts alike will often be confused, because they don't see any signs of a slowdown in terms of numbers. The buyer still competing against 20 other buyers to build or bid on a home certainly sees no signs of a slowdown, and the housing analyst will not yet see a single metric in the report that suggests that things are starting to slow down. So I'll try to unpack what I'm seeing in spite of the figures. Firstly, the earliest signs of a slowdown are a decline in the number of buyers viewing homes and a decline in the number of offers a seller receives on their offer night. Trends which I observed by participants in the market rather than in the data. Every week, I meet with my agents to discuss the real-time trends we are seeing on the ground. By mid-February, we all started to see early signs of these trends. So fewer listings, fewer offers, and we felt the market was going to cool down earlier than we originally thought. Normally, the market usually remains competitive until the end of spring. We have also started to see an increase in sellers willing to take preemptive or bully offers ahead of their scheduled offer night, something that some agents mistakenly view as a sign that the market is heating up. An increase in sellers willing to accept preemptive offers happens due to information asymmetry between buyers and sellers. A seller's decision to accept a preemptive offer is largely a function of two factors: the price offered and the number of showings that they have booked. So we're definitely seeing the market has changed. Less people are going to showings, less buyers in the market, and sellers are actually saying, yeah, okay, I'll take your offer, without actually waiting to see what eventually comes in. And that's definitely making a change in the market. So that started already. There's much more in this article. I've put it in my description for you to read further if you're looking at it. But there are definitely some early signs that the market is slowing down. And the next and the final piece I wanted to show you is from Edge Realty Analytics. This is a company, equipping top Canadian real estate professionals with important data and timely insights to help them stand apart from their competition. So this is a analytics firm, and I want to show you what data they're sharing here. This is a post or a tweet from March 14, 2022. So 1 month does not make a trend, but Toronto just saw the largest increase in MLS resale inventory from January to February in at least 15 years. Take that in. And not just in percentage terms. Inventory rose by 2,800 from January to February, double the typical monthly build for this time of the year. Something to look out for. And look at this number. This is a chart change in active listings January to February, and it's going all the way from 2007 to 2020. And look at the increase here. This is a 70% increase. And look at this, it's blown the numbers. This is about 4 times the number of active listings that have come onto the market compared to any other year since 2007. So what is that telling you? That's telling you people are going to sell more. There's going to be more opportunity in the marketplace. In conclusion, just a few things to take away is we're seeing a slowdown in the market, definitely in terms of number of buyers participating, offer night, how many showings are getting booked. We're also seeing obviously a change here in listings. We should see more listings in the coming months. Obviously, and we're going to see how interest rates play a key factor here, because interest rates are going to go up continuously for the next few meetings here for the Bank of Canada. Next one is scheduled for April 13th, so that's definitely going to have an influence on this market. So I hope you appreciated this video. I'd love to hear your thoughts, love to get a comment, a like, a dislike, a subscription, and I appreciate you taking the time to watch this video, and I hope you found it helpful. So have a great day, have a great rest of your week, and I hope you stay well and stay safe. Thank you for your time.